Hey guys, welcome back to episode 4 of US stock market technical analysis. So in today's video, I'll be taking a look at the technical analysis for the US stock markets, namely the three indexes. So the three indexes are the S&P 500, the Dow Jones, and the Nasdaq. And I believe taking a look at these three indexes will give us a good representation of the overall US stock market. So let's begin with the S&P 500. This is the price chart for the S&P 500 or the SPY. So the ticker symbol for the S&P 500 that I'm taking a look at is the SPY or SPY. If you take a look at the price chart here, you'll see that we are making new highs already. And the thing that surprises me the most is not the quality of the recovery of the stock market, but the speed at which the recovery has occurred. If we just take a look at around the bottom, back in around late March all the way to now, prices have actually increased by around 54%. And that is a very substantial recovery of the S&P 500. And this recovery has taken place all within just a couple of months, and around 5 months to be exact. So the recovery of the S&P 500 has been really substantial in the past couple of months. In fact, the S&P 500 reached its pre-pandemic high back about 2 weeks ago. And in the most recent week, the S&P 500 has surged ahead. So let's take a look at the technical analysis for the S&P 500. Okay, let's take a look at the daily time frame. Alright, so it's taking a while to load. Alright, so we are on the daily time frame. So you can see that prices have actually broke above its pre-pandemic high of around 339. You can see that prices have actually surged forward in the past week. So going back about a couple of months ago, between the month of June to August, you'll see that prices have actually consolidated at this range over here, as indicated by the upper head resistance and the below support level. So if prices are trading between a range of an upper head resistance and a support level below, we say that prices are consolidating in a range. And this was a solid base, because you can see that after the base was formed, prices broke above the resistance and broke out of the consolidation and managed to surge forward. So the base that was formed during the months of around June to early August gave prices a solid base to move forward. After prices broke above this range over here, from here, prices starts to surge ahead. And then this was the pre-pandemic high for the S&P 500 at this price level of 339 over here. So you can see that this was a bit of a psychological barrier, and there was a bit of a resistance at this level of 339. When prices reach this level of 339, prices start to stall a bit. You can see that when prices starts to reach that area of 339, the candlestick starts to become smaller. So when the body of the candlestick starts to become smaller, there's a bit more indecision in the market. And there is indecision in the market when prices are moving close to the psychological level or the pre-pandemic high level of 339. So at the 339 level, there were a bit of resistance, and prices did not manage to break above the resistance for a couple of trading sessions. But on Monday, prices get above this psychological level or pre-pandemic high level of 339. And even though we can see that there was a bit of a selling off, prices managed to hold at this level. And in fact, there was buying pressure which pushed prices all the way back up to close higher for the day. And from then on, from Monday, you can see that prices managed to continue moving upwards. So that is the daily time frame. So let's take a look at the hourly time frame. Okay, so we are on the hourly time frame. So the hourly time frame gives us a better picture of what is going on behind the daily and weekly time frame. So if we take a look at the hourly time frame over here, this blue line is indicated by the psychological level of 339 or the pre-pandemic high of 339. So on Monday, prices get above, and there was a bit of selling here, but prices managed to hold its support at this level here of around 341, right? So there was a bit of support here, and then after it found some support here, it continues to move forward, right? So this old resistance become a new support level for prices. So you can see that after prices broke above this resistance level, and it hits the next resistance level, and it fell back down. And when it fell back down, the old resistance became a new support level. So when prices reached this old resistance level, it found support at this level. This was the first rejection, then we have the second, and then we have a final third rejection over here. So the old resistance became a new support level. And then after prices found support at this level over here, it surged forward. Then again, it hits a new resistance level that is formed, right? So you can see that this was a bit of a resistance. So prices did not manage to break above the resistance for quite a while. And it moved sideways for a couple of candlesticks. But then after that, it managed to break above the resistance level. And after prices managed to break above this resistance level, you can see that prices surges ahead. And then it managed to find some support at this new level over here. The new level of support is a range of 346.66 to around 346.12. Hit the new resistance level, it went back down, and it break above the resistance level with a huge buying momentum as indicated by this large bullish candlestick, and it hits the next resistance level over here before the selling pressure as indicated by the large bearish candlestick, and then it managed to find support at this level over here, and then it continues to move within this mini range over here before it managed to finally broke above this resistance, and now we are around this level. Right now, based on the technicals, I believe that the S&P 500 is a bit overextended. Moving forward, prices might hit this support level before it continues its upward movement. That's one possible scenario. Another scenario is it falls back, but it managed to break below this support level. Then the next support level that I'll be taking a look at is this level over here. And the third scenario is prices continue its movement upwards. So even though I believe that the S&P 500 is a bit overextended based on the technicals, prices may continue to rise. And that is why as investors and traders in the stock market, we must be prepared for all scenarios. Okay, so that's my technical analysis for the S&P 500. Now let's take a look at the Dow Jones. So we'll go on to the Dow Jones, and we'll go with the weekly time frame before working our way down from there. For the Dow Jones, even though we haven't reached our pre-pandemic high, we are already at the level at which we started the year at. If you are a bit more observant, you'll notice that the Dow Jones tend to move in a very similar fashion to the S&P 500. The S&P 500 was consolidating at a range between the months of June to around August. It was also in June, and then it consolidated to around August before it finally broke above the range. So the Dow Jones tend to move quite similarly to the S&P 500. Right, so that's for the weekly time frame. Let's go on to the daily time frame. This is the daily time frame for the Dow Jones. This is the consolidation area of prices as indicated by the resistance and a support level. In fact, the Dow Jones formed a solid base over here before it broke to the upside above the resistance, and right now it's on the rise. And if you take a look over here, you'll see that after prices broke above the resistance and broke out of the range, price hit this resistance level before it falls back down over to the previous resistance level, which is now a support level. Prices finding support at the previous resistance is a good indication that this is pretty strong because prices did not make a false breakout. So what is a false breakout? A false breakout happens when prices break above and then it falls back below the resistance level. So that is a false breakout. As you can take a look here, after prices broke above the resistance level, it managed to found support here. So it's not a false breakout. And that is a bullish sign for the Dow Jones. And after prices found support at this old resistance level here, and now a new support level, prices continue its rise. Okay, so let's go on to the 4-hourly time frame to have a greater picture of what is going on. So you can see that here was the resistance level of the previous range. So prices were trading in the previous range and then it broke out. And it found some resistance at this level here of 280.86 to around 279.58. So this was a bit of a resistance zone. So you can see that prices hit, then it fall back down, hit, then it fall back down, hit, and it fall back down. So that's a bit of a resistance there that prices are encountering. Prices managed to find some support at this old resistance level over here, which is now a new support level. So after prices found support at this level over here, it managed to break to the upside and it continued its upward momentum. Right now, prices are finding resistance at this zone over here. And in fact, if you take a look at the latest candlestick on this 4-hourly time frame, there's a bit of a selling pressure over at this candlestick over here. Moving forward, prices are likely to encounter some resistance at this zone over here and it might fall back down, find some support here before it continues its upward movement. If not, prices might actually continue moving forward. Or if it breaks to the downside, it breaks below here, the next support level will be at this area over here. That is an overview of the Dow Jones. Lastly, let's take a look at the Nasdaq. So we'll go on to the weekly time frame. So if you compare the three indexes, the S&P 500, the Dow Jones, and the Nasdaq is the best performing index for this year so far. And the reason why the Nasdaq is the best performing index out of the three is because the Nasdaq is heavily weighted with tech stocks. And during this pandemic period and this year, the tech stocks have been one of the best performing in the US stock market. And that is why the Nasdaq has been the best performing out of the three indexes. This was the pre-pandemic high. So the pre-pandemic high level was around, let me get the crosshair. So the pre-pandemic high was around 237.39 and we managed to hit that level about a couple of months ago, so back in June. And then since then, we have just been moving upwards. Let's take a look at the daily time frame. The Nasdaq has been trending very nicely. So if you take a look here, it goes up, goes down, goes up, down, up, down, up, down in a very predictable upward trend. Then there was a bit of a consolidation at this area before it continues moving upwards. Alright, so again, the three indexes tend to move quite similarly. They don't move exactly in the same manner, but they tend to move quite similarly with one another. And if you take a look here, prices also managed to form a bit of a consolidation at this area over here between the months of July to around August before it finally broke above the resistance. And then there was a bit of selling pressure over here, but prices managed to found some support at this old resistance zone here before it continues the upside. That's for the daily time frame. Let's take a look at the 4-hourly time frame. Okay, so the purple boxes are indicated by the larger range, and then the green boxes are the support and resistance level of prices. After prices broke above the consolidation, it hits the resistance level. Once it hit the resistance level, what happened to prices? Prices tend to bounce back down. So prices bounce back down to here. And then you can see that at this level, this old resistance zone, price found some support here. And then it found some resistance at this level over here before it continues to the upside. And like I mentioned many times in this video, after prices broke above the old resistance level, take a look at what happened to prices. Prices now are finding support at the old resistance zone. If you want to learn more about support and resistance and how to draw this support and resistance zone and levels, I'll include a link to my video on support and resistance above. And now we are right here, where we are finding a bit of a consolidation. At this level here, there's a bit of consolidation between these two support and resistance zone. So where do I see prices moving for the Nasdaq? A quick disclaimer, no one can predict the stock market. Not me, not you, not anyone else. So in this video, all I'm sharing with you is my analysis of where I believe the US stock market as a whole is likely to head to. I'm not trying to predict the markets. All I'm trying to do is analyze the probabilities of where the markets are moving forward. Here, prices are consolidating in a range. So where do I see prices moving towards to? Prices might actually trade within this range for a bit more to digest the move before it breaks to the upside. The second possible scenario is prices found some resistance here, and then prices will break to the downside. And the third scenario is prices might actually continue moving forward. So those are some of the possible scenarios that I'm taking a look at for the Nasdaq. So that's my technical analysis for the US stock market on the S&P 500, the Nasdaq, and the Dow Jones. Hopefully you guys have learned something from today's video. If you did, do like this video because it will really help the channel grow and allow me to produce more content such as this.